Personal representative is a umbrella term that we use to include both executors when there is a will and administrators when there is no will, when we're talking about settling someone's estate after they pass away. The personal representative has some responsibilities in terms of taxes that must be filed. First will be the final tax return for the person who's passed away themselves. Their tax filing year ends on their date of death. And so generally a final income tax return should be filed for that individual just based on the income that they earned in that year prior to their death. We generally don't have to wait until the typical tax filing year. You can actually use the prior year's forms and then cross out the year and write the present year and submit all that information whenever is necessary. The other may be what's called a fiduciary return. Fiduciary means the person who's responsible over the estate. And so that's what's called a 1041 return. That is to process a return or a refund for income realized in the estate. So it could be rental income paid to the estate. It could be ordinary interest or dividends paid to the estate prior to being distributed to beneficiaries. And then the third tax filing opportunity is much less frequent, and it's the estate tax return. That is the Form 706 under the IRS code. And it's used in really one of two ways. The first would be to claim portability between spouses. That's how we stack exemptions. So if one spouse passes away, the surviving spouse can petition to take their unused estate tax exemption and add it to their own. So in that, they're just filing an information return and checking the box to claim portability. The second would be if we do have a taxable estate, which would be in excess in 2025 of 13.99 million, or after both spouses have passed, pretty close to 28 million. And it would be to claim the amount over the exemption as a tax liability and then pay what's due to the federal government.